Good afternoon, everyone. It's 10 to 2 here on Wednesday, the 27th of October, and you should get this in your inbox on Saturday, the 30th of October. I'm looking at VectorVest UK, and as you can see, we've got some nice green on the front page of VectorVest UK. Let's look at the two most important words, I believe, on VectorVest. Up and up, and this means that the short-term trend or the primary wave of the London market is up, and the underlying trend of the London market is up. And very importantly, that underlying trend has been confirmed by 2 weeks price action, and that means that since the close last Friday the 22nd, we are in a confirmed up situation. So it means that the short-term trend is up, the underlying trend is up, and the longest measure of the trend on VectorVest is up. For those of you that are following our worry-free investment plan that I've written about thousands of times in the essay, it means that you should be thinking about getting towards fully invested, as I am at the moment. On the color guard, and as you can see, the color guard is no more than a table of the VectorVest Composite, the momentum or the RT of the VectorVest Composite, and the buy-sell ratio, the number of shares in VectorVest UK that are on a buy divided by the number of shares that are in a sell. And very importantly, folks, we can see that there is a green light, and it has been a green light for the last 3 days on the price column. And this means that the price is up day over day, higher than it was yesterday, higher than it was this day last week. And again, very importantly, we've got a little black star winking at us within the green light, telling us that the price is up day over day and week over week, and the momentum is in fact rising as well. So we've got the price rising and speeding up at the same time. That's a darn good sign. If you put your cursor on the little black star, you can see that the price movement has been confirmed by the RT kicker combo. And the advice is good. VectorVest advocates buying safe, undervalued stocks that are rising in price at this time. So it looks to me as if the sell-off that we saw during the course of September and October has run its course, and that hopefully, and I'm sure there'll be a few ups and downs along the way, that we're heading into a nice run up into Christmas. So let's just have a look at the VectorVest Composite, which all of this is based upon. And to get that, especially new people, if you click on timing and then go to the market timing graph itself, we can pull up the VectorVest Composite. I'll untick these two things for a second. And that, ladies and gentlemen, is an equally weighted index of all 2,200 shares that we follow on the London market. If I go back a little bit using the slider, we can see there's the COVID sell-off. This is the progress of the market since the end of March last year. We've had a very, very good run in this. At least I've had a very, very good run in it, and I think most VectorVest customers have as well. Now, I've written on many occasions how the market timing signals are in fact constructed, and I won't bother you with that today. Nevertheless, all the VectorVest market timing systems are in fact summarized in this little drop down. And if you click on confirm calls, which is the longest measure of the London market, it'll populate the chart with these red and green triangles. Now, the first thing that I would like to mention is the red and the green triangles do not repaint. In other words, the software doesn't fiddle it and print a signal and then the signal going away again. When it's there, it's always there. That's the sell-off for COVID. Darn good sell-off was. That is the confirmed up, which came on the 27th April last year. If those of you that are long-time subscribers will know that I get in much earlier in that, based on a medium-term signal, which I'll come to in a moment. And as you can see, after the close last Thursday night, the market was up. Now, for most people who are position traders, this is really all you need, okay? And you want to be pretty much fully invested when we've got a confirmed up. And when we've got a confirmed down, well, you don't want to be buying any stocks, because we don't know, are these little sell-offs just little sell-offs, or are they something much more serious? You just simply don't know, and there's 1,000 people out there who'll sell you a course at £3,000 or $3,000 most likely, that will tell you they don't know either. So nobody knows what's going to happen next, I assure you. I am busy getting back to fully invested. I bought another couple of shares yesterday, and I don't know what's going to happen next, but I've got a signal, and being fully invested when we've got a confirmed up signal has been very profitable for me since I've been using VectorVest since 2010 now. So that's the longest term measure of the market. Now, a medium-term measure of the market is known as the DEW, and I've written about this on many occasions. As you can see, it's considerably noisier. If we go back for the last 6 months in the data, we can see that it's given some fairly good signals, and these signals can be used for swing trading. And as you can see, in here, and said it was in fact not safe to be in the market from the 14th of September, and it says it's now safe to get back into the market from the 21st, one day before the confirmed up. So that's a medium-term market timing system, which I personally use both in the UK and in the US for swing trading. The shorter term measure of the market, the primary wave, there we go, much noisier and quite useful for short-term spread betting over a couple of days. As you can see, some pretty good signals here. That was a darn good short. That was a very good short. A bit of speed wobble here, and that would have been a very good long position over a couple of days. If you listen to Steve Chappell, who's the head of Trading Systems Development, who spoke at our national user group the other day, he has a swing trading system based on the primary wave, which works very well in the US markets. But folks, you just got to remember, in the US markets, they have got zero brokerage, and they've also got no stamp duty to pay. When you add in considerably higher UK brokerage, and you add in that 0.5% stamp duty, then that becomes quite difficult in the UK with common stocks. Clearly, in a spread bet, you don't have to pay that 0.5%, so maybe you'll get away with it in that environment. I think, folks, if you're on the right side of either the DEW, or if you're on the right side of the confirmed calls, you're going to do exceptionally well in this market. So for my swing trading, the DEW, for position trading, which is primarily the portfolio that I do my best to maintain on a Monday afternoon, I'm using the confirmed calls. So all looks good, and from a more basic technical analysis point of view, we can see that this resistance has become support twice. That's a pretty good sign that we're going to move and move higher. That's the UK market, and if we go across the pond into the US, we can see that we've got a similar situation. maybe not quite as strong. The VectorVest advocates caution when buying stocks at this time. This market's come quite a long way. We've had a confirmed call in place much longer than the UK, and we're in an up situation. And as I'll show you in a second, the DEW is up as well. Again, if I click on timing and go to the market timing chart, and I'm just going to get rid of everything because I haven't got the time to actually talk about its construction, because I've gone into that so many times. This is the US markets, a similar composite of all 8,000 odd shares that we follow in the US markets. And if I put on the confirmed calls, you can see that some great signals, and then since March this has been very difficult, and that's the last confirmed up. And as you can see in the American market, the reason for that caution is that we're on an all-time high, and we're on an all-time high for the composite. And if you wanted to look at some of the indices, you'll find that the S&P 500 is sitting up slightly above that all-time high. So a lot of shorts will come out of the woodwork at old highs. That's pretty much the only thing they do. If we have now go back to 6 months and have a look at the DEW, that medium-term measure of the market, it's been difficult. And in this chop, folks, this just hasn't been easy. And after the easy markets in the US of 2020, certainly most people have found the last 6 months, including me, found the last 6 months quite difficult indeed. But at the moment, we've got a DEW up, and I have 5 or 6 spread bets running. I talked about them all in the Q&A on Monday afternoon. And you should have got a recording of that. So for the moment, the US market needs to get up through this high, and I wouldn't be at all surprised to see a little bit of a pullback first before getting through that high. But I am optimistic that our market can do exceptionally well between now and Christmas, but I'm always pretty much overly optimistic. I'm holding these stocks, Cape, Sylvania, ICP. I like the look of, folks, at the moment, and I'm going to write about that. You should see that in the blog, in fact, before you get this video. I bought into Polar Capital this week. I added to JD Sports, added to Cape. Bellway is hanging in there. I bought into Volex, KNOS. I've held for quite a long time. CCC I've had for a long time. Pershing Squares pushed up very nicely, and of course my 2 gold stocks well off their lows. Very happy with that indeed. Gold at a decision point. So getting back slowly but surely to being fully invested. Hopefully looking forward to a great run up into Christmas. Let's just have a look before we go at ICP, because it's starting to look, and as you can see, there's the earnings per share. I think if there's one thing that I wanted to point out on VectorVest, folks, that increases the hit rate, the accuracy of your trades, is just simply this earnings per share rising from bottom left to top right. This is a good sign, folks. If you see the earnings per share ramping up like this, it pretty much means that the stock has done more than either ourselves, VectorVest, or FactSet, where we get our earnings forecast from, more than they have anticipated. So that's a very good sign. As you can see, we've got resistance. It came back once and couldn't get away. It's come back again. Couldn't get away and ran the stops once more. And I think now that I have one of my spring setups here, and if you can see, there's the confirmed call. That's the confirmed call that came in the other day. That looks to me as if it wants to move much higher, and I'm going to consider adding to that position as well. If we have a look on VectorVest, as you can see, the RV is 1.65, which is right up there in the bloody marvelous category. and RS at 1.3. So it's got that wonderful mixture, in fact, a very strong mixture of growth and safety. And those are hard to find, ladies and gentlemen. They're really hard to find. As you can see, we anticipate that percentage annualized earnings are going to grow at 38% next year. And if we go across to the dividend column, earnings yield is 5.6 and the dividend yield is 2.54. So that dividend is covered 2x by earnings. And dividend safety at 77 out of 100, which is good to excellent, and dividend growth at 13%. So that a company would seem to be doing all the right things. It's trading at 22. VectorVest believes it's worth 25, but it's this 1.65 RV that really attracts me to the share. If everything stays the same, I shall feature that in my blog on Thursday. I hope you found this useful, folks. I think that it's time to be brave. I wouldn't be at all surprised to see a pullback before, and the pullback could try, I assure you, will do its darndest to shake us out. But I anticipate a nice run up into Christmas. So I look forward to seeing everybody on Monday afternoon at 1:30. Bye-bye.